Welcome everybody. We're just gonna wait a minute or two here while the room fills up. So just give us a second and we'll get going. Well, afternoon, everybody. Welcome to the Lansing Regional Chamber of Commerce webinar series. Our series today is focused on qualifying for the Paycheck Protection Program Forgiveness, PPP. I'm Steve Jappinga with the Lansing Regional Chamber. I'll be the webinar operator this afternoon. And again, thank you for being with us today. Both of our presenters from Rehmann, Tom Shemanski, who's a CPA principal, CFO with Rehmann, and then Andrew Rose, again, principal commercial industry group with Rehmann. So we're really excited to have both of these gentlemen back with us to help guide us and you through the PPP forgiveness process. As a reminder, this is a webinar format. When you enter the room, everybody's on mute. We cannot see your video, so don't worry. You may ask questions during the program. I think Andy's going to be looking at the chat box and answering any questions that you may have during the program, but at the end of it, there'll be opportunities to ask questions of the presenters. Of course, use the following protocols: raise your hand, ask a question in the chat box, the Q&A tab. This program is being recorded. If you missed anything, we'll be sending out the recording afterwards, and this will be part of our communications on our YouTube and social media platforms. So with that being said, again, thank you so much for joining us this afternoon. And Andy and Tom, I'll leave it up to you guys. Thank you.
Thanks, Steve.
All right, good morning, everyone. Welcome to this next exciting chapter of PPP discussions. It's been quite the whirlwind since this thing rolled out. So we'll kind of jump into the presentation and kind of see what some of the latest and greatest information that has been released from the SBA. So I think a lot of you have been in this process for some time. The act passed back in March, and it's just been an ongoing process of updated information. I think more recently, June 5th, the PPP Flexibility Act was released, and that really geared towards changing some of the coverage period weeks from 8 to 24, and just doing some things to make it a little bit easier for borrowers to spend their funds. And then June 17th, we were released an updated forgiveness application and included a new form, an EZ form, to try to simplify the filing process for certain borrowers. So, and I think since then we've also had one additional release of updated interim final rules. So I think this is good timing for today's presentation. There's a lot of information that's kind of come out over the last 2.5 weeks that we can kind of summarize into kind of those key areas. So the PPP Flexibility Act that passed that I talked about, this is just a quick overview of the key attributes. The big one was the extending of the coverage period from 8 to up to 24 weeks. Again, this bill went into place June 5th. So for anyone who gets a loan, please keep in mind there's $130 billion still left in the program. So there are still people looking at this and applying for it even now. But anyone who applies after June 5th will automatically fall into a 24-week coverage period. Anyone before the Flexibility Act will have the choice to either select an 8-week or a 24-week coverage period. The other big change was that they reduced the payroll defined cost from a 75% minimum spend down to 60%. So those of you that are in higher rent districts or some of the higher fixed costs with utilities, this gives a little more breathing room that you now can spend up to 40% into the non-payroll cost areas. Another thing that they rolled out was the FTE. They added a new FTE safe harbor, which really revolves around, was your business impacted by COVID? Was there social distancing? Was there any government regulations that really limited your ability to return to the same employment numbers that you had for the FTE testing? A couple ones that just come to mind really easily are, restaurants or hospitality or venues that have capacity constraints on them. I mean, obviously, if you're only running at 25 or 50% capacity, there's no way that you're going to return to the same staffing level because you won't have the same amount of people to service in your space. So that's an area where it's a check the box as FTE safe harbor if you were impacted in that way. They didn't give a lot of information as far as what you need for documentation, other than you probably, if there's a state executive order or something outlining that requirement, that information you'll probably want to have handy. But it was a pretty general release of information at this point. The other thing is they did, there was the FTE safe harbor that ended on 6/30. They now have extended that to 12/31 as well. So a couple other areas that came out is the maturity date. The loans now can be extended to 5 years. So again, if you get a loan after June 5th, it's automatically going to be 5 years. If you got a loan before the June, if you already had a loan in place, you already signed a promissory note, your lender has the ability to go to 5 years, but it's up to you as the borrower to reach out to that lender, and it has to be mutually agreed upon. So there was nothing in the bill that made it mandatory for lenders to extend to 5 years if the promissory note is already in place. The language is that mutually agreed upon between both sides, it can be extended. So if that's something that interests you and you already have your promissory note, you got to reach out to your lender and make that request and see what the bank's position is. The other thing is they eliminated the 6-month deferral and just basically said, you're going to have 10 months from the end of your coverage period, and if your forgiveness isn't filed and sorted out, then you're going to have to start to make principal and interest payments. So there's a little more flexibility there on the deferral period. Another clarifying point was that you can now also take advantage of the FICA deferral, the 6.2% employer portion for Social Security. Whether or not you have before, if you had PPP, once the forgiveness was granted, you could not use that program. Now you can. So again, that's a program where you can defer your FICA employer portion, and then you have a 2 lump sum payments at the end of the upcoming 2 years to sort of make that whole. Then the other piece, another pretty important one was, we had this 100,000 pro rata that was defined during the 8-week coverage period as 13,385. Well, they expanded that for the 24 weeks. So non-owner employees are now 46,154. And the other thing they did is they expanded the owners to be instead of the lesser of 8 weeks, they've expanded that to the lesser of 2.5 months of 2019 compensation, or 20,833. So they did expand that from the 13,385 as well for the owners. one of the things we talked about is they released a new form, a 3508EZ. I'll be honest, it's not overly easy. It's slightly easier. So it still requires you to basically run through the same calculation, with the exception that there is no FTE requirement, and there is no Schedule A. So it's basically just a 2-page application, and you summarize the information a little bit more than you do on the standard application. But this is only eligible for borrowers that meet any of the 3 criteria listed under here, 1, 2, or 3. So either you're self-employed with no employees, if you can do that, then you can use the easy form. You can also be a borrower that did not reduce any salary or wages greater than 25%, and you didn't reduce your FTEs. So kind of things are just status quo for you. And the other thing is if you were unable to operate at the same level due to the government regulation. So as long as you didn't reduce any wages or salary, and you were impacted by COVID to where you couldn't get back to the prior level employees, then you can follow this easy application. So it's both the easy and the standard are updated. They're on the SBA site, and we'll take a look at the standard one here a little bit later in the presentation. But that easy, I don't know that it'll apply to a large majority, but there are some folks that this would apply to.
Well, you're still going to have to go through number 2 and number 3. You're going to have to give that some consideration and go through the calculations in order to get to the point where you can even be eligible to use that form. So I agree with you that, number 1, it's easy definitely for a self-employed with no employees. Number 2 and 3, it still requires some work.
Yeah. And then there was some additional guidance released here on June 23rd, following up on those application releases, and a couple interesting things that they clarified here is one big question we were always getting is, well, I can't get my money spent in 8 weeks, but I get it spent 10 or 11 weeks. Do I have to wait the full 24 weeks to file for forgiveness? And the SBA came back and said, no. If you've spent all your money, you can file anytime, even before your coverage period. But one big caveat is if you did have that 25% excess wage issue where you took someone's wage, either salary rate or hourly rate, down by more than 25%, you do have to estimate what that would be over the full 24 weeks and deduct that from your forgiveness number. So, but that kind of cleared it up. So if you're 11 weeks and you've spent all your money and you've got the FTE figured out where there's no reduction there, you can go ahead and fill out that application after the 11 weeks. You don't have to wait for the full 24. So a couple other things they pointed out for the forgiveness, C Corps were now added. So they added C Corp owners that they are capped under the same kind of basis of the 2019, cash compensation and employer and healthcare contributions made on their half. So that 2019 prorated amount is the schedules for the C Corporation owners now fall under that kind of same basis as the other owners did. The other thing is that they did say the FTE reduction or the safe harbor was extended to December 31st, and one of the safe harbors they added was the government impact, and they clarified that they made it real specific that it could be state or local government shutdown orders that were based upon in part by the federal guidelines. So for us, everyone here in Michigan, obviously the governor has released numerous executive orders, and those are all things that could have impacted and made you qualify for that safe harbor of not being able to get back to your full-time equivalent number. So, so now what do we know? I think everyone's big question is how do I maximize forgiveness? I think, there's the combination of the 24 weeks and the 60%, you know, boy, I just don't see many businesses that won't spend it in 24 weeks with those two changes. So, you know, I think then it really gets down to, I'm going to spend it. Now, how do I make sure I maximize forgiveness? And it's going to be really avoiding those two tests. It's going to be avoiding that 25% excess salary or avoiding that offset on the FTE. So, you know, I think what this did too is it eliminated a lot of those smaller questions. You know, like for example, utilities and, you know, utilities include a word called transportation. You know, and people are like, well, hey, does that mean gasoline for my trucks? What does that mean? And the reality is I don't think people are going to have to stretch as far to get their dollars spent. It's just simply going to be covered over 24 weeks under that gross payroll definition in those key rent and utilities and things. So I think what you're going to find is a lot of these questions that you were thinking about, or a lot of those questions I know that I was being asked about, real specific things that maybe would get you a couple extra dollars here or there. You're just not going to have to worry about that now. You're not going to have to stretch into maybe what are perceived gray areas of forgiveness, because you're going to generate enough just through standard payroll, standard rent, standard utilities, Blue Cross Blue Shield payments, those type of things. So I think it does really shift. To me, I would say 95% of the clients that I've dealt with, you know, that none of them really reduce significant wages, that 25%. You know, it's all been in the FTE. You know, it's all been in layoffs and how those numbers look at. So we're going to dive a little deeper into each of those, or into the FTE. So with the recent updates, there's basically 3 check the box options for kind of this safe harbor where, you know, you just, if you can check the box, nothing else is needed. It's no reduction of your forgiveness related to FTEs. You know, the first one is simply, you know, there's really been no change since January 1. You know, if since January 1, your average hours paid, your head count, nothing's changed, you can simply check the box saying, hey, nothing's changed. And then you won't have any reduction on your FTE. The second is Safe Harbor 1, and that's now been changed to be that definition of, hey, I couldn't get there from an FTE standpoint because of government related MIOSHA or emergency orders or whatever it might be. But, you know, I was at 50 people and I could never get back to it because I was restricted. And so that's a safe harbor, no reduction. And then the last is the safe harbor that was released with the first application. And that's kind of a 2-step process. The first question is, what was my head count on 2/15? And did it go down by April 26th? You have to be able to say yes to that. If you did, great, you move on to the next step. The next step is, did I restore back to that 215 level the earlier of December 31st or the date of my forgiveness application? So that was a good point of clarification, because it now gives us this kind of framework to say, hey, you know, if I'm struggling with FTEs and I want to, in Safe Harbor 2 is my best method. You know, we can run through an example where, you know, I got my loan on April 20th and I used the 24-week period, maybe ran me through, you know, middle of August, and I was at 100 employees on 215, and even through the end of my payroll period, I never got back to 100. Maybe I got to 85 or 90. You know, you can wait towards December, all the way till December 31st, but let's say the week at October 10th, you finally get back to 100. Well, that's when you can file your application, and you can check the box that you restored to 100, and then you can avoid any offset to your forgiveness. So it does allow to give you a bit of a roadmap on how, you know your number, and then you can figure out, how do I get there? You know, do I pull ahead a bunch of work in September, and do I get my head count up just so I can, you know, get that 1 week where I get back to 100 and I can check the box and complete my application? So it does kind of give us that clarity on how we can go about meeting that Safe Harbor 2 calculation. But again, these are all check the box FTE options. If you don't apply for any of these, then you have to go back to the original, the traditional average headcount calculation, which again, you're going to choose the lower. We go down to this bottom section, you're going to go to the lower number that you've got either from February 15th through June 30th, 19, or January 1 through February 29th, 2020. You're going to take the lower of those two and you're going to compare it to your coverage period. And if you had 100 average during the prior reference period and you had 80 during your coverage period, that's a 20% reduction of your loan forgiveness. So that's just a straight calculation. And again, that's why this is so critical, because 20% is a significant amount of reduction. And if you spend all the money, now you've got a loan for money you've spent. So that's where it gets a little frustrating, I think, for some people, because they just are struggling with the FTE, or they maybe just didn't understand how this calculation worked, and then they get really frustrated when they find out how it does work. So it's a significant area, and by far I think it's the most critical aspect of understanding really where you stand on the forgiveness side is really based upon that FTE calculation. So next slide. So these are the actual, this is the actual kind of updated application. We can just, it should allow me to open this up on my computer if the technology is going to work, which it did. So this is the updated application. It's very similar to the first application. Again, they changed that percentage. Remember, it's not a cliff, right? It's whatever you spend divided by 0.6 to get your total gross forgiveness. So let's say you only spent 50% of your loan on payroll. Well, you take that number divided by 0.6 now, and it just kind of figures out that 40% cap. So, in that instance where you only spent 50%, you're going to be limited because the calculation won't allow you to get to your full loan. So there will be a portion automatically, whether, no matter what you spent on the other side, that's not going to be forgiven and will be treated as a loan. So same 2-page application along with the Schedule A, and same worksheet A, worksheet 2, or worksheet B, and then this is where they clarified that one comment that it's the earlier of December 31st or the date of this application is submitted. So that's where we're really controlling that safe harbor 2 by when we put this date in here. So that's the application. Not a lot of changes. On the instruction side, let this open up. On the instruction side, again, it does, specify, on the application, there's no check the box. You just fill out your coverage period. So you're going to fill it out either as a 56-day or 168-day time period, your choice, if you had a loan before June 5th. After June 5th, it's always going to be that 168-day coverage period. Nothing changed with the alternative payroll coverage period. Again, the 0.6, and then, again, here's where they added, some of the language on the owners and those caps. They have now included the C Corps in there as well. And I think that, yeah, and this is just the FTE section. Again, this is the section that really talks about, the new section that talks about, hey, if any of these things impacted you where you couldn't get back to your old headcount levels, that's an exemption for the FTE test. So, kind of what's unknown, or what are some of the things that people are still kind of talking about? Still from the certification of need, again, over 2 million still going to be subject to audit. That hasn't changed. I think there is still concern because there's still a lot of talk about, that if there is a round 2 of PPP, that there's going to be revenue tests or there's going to be profitability tests, and so I think there is some level of, the SBA has changed things midstream. So I think if if you've got your forgiveness clearly figured out and it's a high percentage, 90+%, then I would say, you should be targeting to get your application in as soon as possible, because the SBA, even if they changed it, if they made a change, they'd say, hey, if you had submitted something prior to that change, you're good. So I think anyone that maybe their business did a lot better than they thought they did, they've got their forgiveness all figured out, you're probably best to get that application for forgiveness in as soon as you can, just so you can get the forgiveness granted. It comes off your books. You get rid of the loan off your books. So there's just a lot of good reasons to push ahead with getting your application in on the forgiveness side to avoid any potential changes in the future. On the privacy side, there has been some recent guidance that has said that anyone over 150,000, that information, if you had a loan over 150,000, that information is going to be available to the public. So again, I think people are considering optics. They're considering who finds out about this, but that's the latest of what we heard. There has been some discussion of some lower loan amounts that maybe they would just give automatic forgiveness. But that's something that there was a hearing on it back on the 17th, and it's been kind of kicking around the legislation a bit. But that's something we're keeping an eye on, and there's still no change on the deductibility of the expenses. So that's one that we're still keeping an eye on to see if they put something back out there for that. So I think those are the things, those are the hot topics that we're kind of trying to keep an eye on. I think that's the information. So we kind of wanted to get through it and allow some time for some questions and answers. So if you've got them, put them out there and we'll kind of run through them. But that's kind of the highlights of what's really happened over the last 3 weeks, which has been pretty busy.
Tom, we do have some questions that have come in. So the first one here is this person's asked to make sure that we cover how the monthly payroll cycles work. So I think what they're referring to is the ability to choose that alternate covered period. Sure. You want to kind of cover that that part of it? Yeah.
So the alternate payroll coverage period is the ability to start your 50, your 8 or 24 weeks tracking at the beginning of your next payroll cycle. Now, if you're a weekly or a bi-weekly, you're eligible for this. If you're more like, if you're bi-monthly or monthly, you're not. So you have to be on a bi-weekly or shorter frequency weekly. So how that would work is if you were a weekly payroll and you got your loan on Wednesday, you could defer your payroll tracking to the following, let's say Mondays when your next payroll starts, and then you would have then 8 or 24 clean weeks from that Monday, because it'd be at the beginning of your payroll period. So again, you're gonna record those 8 or 24 weeks, and it's fine that last week is actually paid after the coverage period, as long as it's paid on the regular cycle. It's really an accrual type tracking system for those specific 8 weeks or 24 weeks worth of payroll. So if you don't choose the alternative, or you can't, then what you're left is prorating the first and the last week of payroll, because if you get your PPP loan on Wednesday, if you're a Monday through Friday, then the Wednesday, Thursday, Friday of that week is included in your coverage period. And then when the coverage period ends, you're probably picking up a Monday and Tuesday on that last week. And again, that last week is eligible, even though it's paid after the coverage period, as long as it's done within the normal payroll cycle. So that's kind of an overview of the, how you track and monitor your standard payroll and your alternative payroll.
And that only applies to the payroll costs, right, Tom? That does not apply to the utilities, rent. You still have the same coverage period for those. Okay.
Yep, those have to fall in the standard coverage period.
Okay. What if an employee leaves on their own during the covered period?
Yeah, so there's a number of, they're called FTE exemptions. So if an employee leaves on their own, if an employee is fired for cause, or if an employee was laid off but refuses to come back, those are all things that can be excluded from your FTE calculation. In the case of an employee that refuses to come back, you are required to notify the unemployment agency within 30 days of that happening and getting documentation that they refuse to return to work. But those are three areas that with some documentation, you can get them excluded from your FTE calculation.
All right, this is one that I know we've had lots of. Can I use my PPP funds to pay hazard pay to employees?
Yes, maybe some guidance came out maybe a month ago that said that hazard pay, bonuses, all those things are eligible costs as long as they fit within the cap. So again, on an 8-week basis for a non-owner, that cap's going to be that 15,385. So you can bonus someone, but if it exceeds the 15,385, then anything above 15,385 will not be eligible for forgiveness.
When figuring IRA funds into the calculations, do I just calculate the company match? I think she's referring to maybe like a simple IRA. It must be the matching for the employees.
Yeah. It's only the employee portion.
Okay, answer live. We are on track to use up all the funds with just payroll in 8 weeks. Should I have anything left over, can I just call it hazard pay and pay it out to employees?
Yeah, I mean, there as long as they're all under the 15,385 cap. But I guess from a business standpoint, I mean, I'm assuming that there's no rent, there's no utilities, there's none of these other or health insurance or any of these other categories that you could absorb those dollars, without having to pay the hazard pay. Now, that's just more of a business decision, is what's the best way to use the dollars. Do I consume it through some of these other non-payroll costs, or if you're really looking at it to get, additional pay to the employees, then yes, that can work as well.
All right. If an employee voluntarily quits due to self-diagnosed COVID stress, and that person's work can be covered by the remaining employees, does this reduce PPP loan forgiveness if the employer does not hire anyone? So this person's essentially leaving on their own accord.
Right. Again, if it's a voluntary quit, then they would fall under the FTE exemptions, and you would not need to include them in your FTE calculation.
This one, Tom, here, can you clarify the owner employee pay? So if the owner had a $120,000 salary in 2019, the most they could receive in pay from the PPP is $25,000, right? But it looks like the limitation is 20XXX. Please explain the difference.
Because I think the employee owners are limited to 2.5 months of their 2019 compensation, and that's so it's capped at 100,000. So that less than number is the 100,000. That's what it equates to over the 2.5 months.
And there's no limit on how much they can pay out of the PPP funds, but it's just a matter of how much can be included in the forgiveness. So essentially,
correct.
If they wanted to pay themselves more than the cap, they could, but that becomes a loan.
Correct.
Okay.
Yep. Yeah, it's only on the forgiveness side. The cap is the 20,833 is simply that 2.5 of 100, 2.5 out of 12 of 100,000 prorated.
And I don't see any more questions that we have not answered. I think that's it.
Yeah, if there are any other questions, please please ask those now. But you know, Tom and Andy, you guys might have just answered them all. So
I think I don't think, Tom, you covered this. I'll just point out one thing out there too with regards to timing. There's a lot of talk about those that are taking the longer period of time, you know, the 24 weeks, and you know that's starting to bump up against their year end, assuming you're a calendar year end. And you know, it doesn't appear, at least from what we know right now, that this is a super fast process to receive your final documentation on your forgiveness part. You know, if you look in the in the guidance so far, you know, there's a 60-day time frame and then another 90-day time frame by the SBA. So just kind of keep that in mind. If you're someone that likes to wrap things up pretty quick at your year end for whatever reason, you know, and you apply towards the end of the year, you may have some issues with trying to wrap up your financial statements. And those are some things that are still out there too. You know, what do we do with expenses? If it's 12/31, I'm closing my books down and I have no idea what my forgiveness number is. You know, do those become non-deductible? Can I deduct them? And then in 2021, treat them as non-deductible? I mean, there's things to consider there with what you choose as to the day you submit that application. Tom, anything on that? Tad?
No, not really. I mean, I think, you know, it is when you stack up those days, it is going to take some time. And I think it's, yeah, I think the other thing is, you know, now that the applications are fairly well defined, you know, it's, you know, it's important to realize that you know, there's certain line items that need to be filled out a certain way. So you need to make sure that your data collection processes are lining up with those lines on the application and on the worksheets, because, you know, that at the end of the day, you know, that you're not required to put that worksheet A or B in with your application, but that's where the numbers are coming from. So the expectation is that you're using them internally to get to the numbers to put on the application. So I think it's important that you look at how those applications are laid out and look to see how you're collecting your data, so you can not only easily fill the application out, but if you're reviewed, definitely if you're over 2 million, you're going to get reviewed. So it's really important that you can easily show schedules and documentation that tie out to your application and how you got there. So the cleaner you can make that process and line up your source data behind it, you know, the easier the process is. And you know, and don't be afraid to ask for someone to take a look at it. You know, whether it's you know, your current CPA firm, whether it's your attorney, whoever you might be working with, you know, have someone just take a, you know, before you submit that application, have someone take a second look at it. And because I'll say a lot of smaller businesses, it tends to be one person doing the application and collecting all the information. So, you know, sometimes that's where it's easy for mistakes to happen, because it's really only one person doing the whole process. So it makes a lot of sense to have someone to take a second look before you upload that information, and just be sure that, you know, the interpretation's right, the data collection and roll up is right, and the form's filled out properly. Because I think, you know, just like the loan processing side, if it's easy for the bank to interpret, if it's easy for them to tick and tie the dollar amounts, those applications are going to go through smoothly. If they're not, they're going to go to the back of the pile, and it's just going to take you that much longer to get through the process.
Tom, I've got about 3 questions here on the FTE test. So, you know, using the 40 hours and anyone less than 40 hours, figuring out, you know, what is that person, you know, 3/4 of an FTE, and then also the simplified method. So choosing just 0.5 or 1. Can you talk a little bit about that too?
Sure. So so the definition of the FTE is 40 hours and above equals 1. So anyone who works 40 hours to 100 hours or 200 hours a week, it's all 1. If you work less than 40 hours, the simplified method is just simply anything less than 40 hours is 0.5. So you work 1 hour, you're a 0.5. If you work 39 and a half hours, you're a 0.5. And then other than the simplified method, then you can choose a fractional calculation, which rounds it to the nearest 0.1. So then, you can round to 0.9, 0.8, 0.1, 0.3. And so it's your choice, but you have to be consistent with the methodology. So if you're going to do the simplified, then you're going to do the simplified for every FTE calculation you're doing, whether that's the standard method, whether that's the safe harbor, method, but you're going to calculate that FTE the same way across the board. So I think you just have to kind of, we have a lot of clients that run both the fractional and the simplified, and they just see, well, is one better than another, right? And where we see it helpful is, let's say your prior period, you had a lot of people working, 35 hours, 32 hours. And so, the fractional method gets you a lot of 0.7, 8, and 9s. But during your coverage period, you weren't as busy. So you had a lot more people working 20 hours, 15 hours. So in that instance, it makes a lot of sense to go with the simplified, because now you can compare a 15-hour person is the same value as a 35-hour person. So then that helps you if your coverage period is on average less hours than your and I'm talking only the people under 40 hours. So, you need to do some analysis to see which method works the best, to see, hey, sometimes the fractional works better, sometimes the simplified works better. Just depends on each side and if there's a weighting of over or under 20-hour workers that is really affecting your FTE.
This one is asking, can you please clarify, I can extend payroll cost out 24 weeks, but I can only use utilities, rent, etc. for 8 weeks. And that is not true. You can use the 24 weeks for all of those things: payroll, rent, utilities, interest expense.
Correct.
Who actually approves the amount forgiven? The bank, credit union, or the SBA? There's a good one.
Yeah, that is an interesting question. We've had various people looking at the language. It would appear that the bank's responsible for reviewing certain things and then submitting the application. The SBA has left themselves some outs. They have made some comments of that if the SBA does review and decides it doesn't agree with something, so I think for the main part, the banks will be kind of controlling the basic processing interpretation, but the SBA has left it out there that they can review and make their own interpretations or their own things they want to look at past the bank. So I think the answer is both, to be honest, to a certain extent.
Here's a good one. Would it be a good idea to have our accountant look over it? I'm assuming she's talking the forgiveness calculation.
Yeah. Like I mentioned earlier, this just isn't, and we kind of joke about when they said easy form. It really wasn't that easy, and the full application is less easy. So yeah, I mean, there's enough complexity where, as a business, you're doing this once. Your CPA is probably doing this hundreds or thousands of times. Our firm, for example, we've got a call twice a week that probably has 160 people on it, where we're constantly training, constantly updating, and we've got a core team of probably 6 to 12 people that simply review overnight changes and work on strictly interpretation and trying to best understand what the guidance means, what it doesn't mean, and to develop our firm positions with how we advise our clients on, here's a conservative position, here's an aggressive position, here's where we think the risks are, and then clients have to make a decision on how what they want to do with it. But yeah, definitely, your CPA firms in your law firms are spending a lot of time, trying to understand this and then help their clients with it. So I do think there's a lot of value to go to your professional and just get a second set of eyes. Because like I said, once you send it in and something's not right, it's going to go to the back of the pile. It's going to make cleaning that mess, and it's going to make the process a lot harder than it needs to be.
I don't see any more questions, Tom, but this is a question that I've fielded several times, so I'll throw it out there to you. Paying a child or a spouse. So I'm the owner of my business, and I want to bring my child or my spouse onto the payroll and have that be part of the forgiveness. But I'll throw a little wrinkle out there. I didn't pay either of them, my child or my spouse, in 2019. Any issues with that?
Is there any specific guidance that prohibits? No, I don't think I've seen specific guidance. We have seen some guidance that if you own multiple businesses, that your 100,000 pro rata is across all your entities. So, if you're a business owner that's got 6 businesses, the expectation, the guidance is that you're not claiming that 100,000 pro rata forgiveness across all 6 entities. So there's been that guidance, but they haven't extended it to family, immediate family, neighbors, good buddies, all across the board. So I think that's one of those areas where we would advise that there's probably some level of risk there, because at any day the SBA could come out with guidance saying, hey, family members are included in this 100,000 prorated type number, so the family unit only gets this one deduction. But have we seen that guidance out yet? No, we haven't. Could it come out? Sure. So it's probably one of those things that I probably wouldn't go overboard with, and just try to use some prudence there, and because it could come back, and that's one of those things where the outward appearance is going to be really straightforward, that it was a direct effort to stretch the interpretation for the owner's benefit. So I think those things always have a higher degree of risk versus hey, this rent was, I paid it a day before, and I think it really should be included. It wasn't a direct benefit to the owner per se, so that one's maybe a different risk category than when you're talking about the ownership trying to expand dollars into their own pockets or into their immediate family's pockets.
Yeah, and you brought it up earlier too. I mean, having the ability to choose a longer period of time. I think in some cases, we won't have to get super aggressive or creative in terms of how to spend the money. If we've now got more than 8 weeks, I mean, we can simply use it on the things we have clear guidance on.
Exactly.
I don't see any more questions. Looks like everybody got 10 more minutes back in their day.
No, thank you to both Tom and Andy for going through that again with us. Appreciate your entire team and everything that you guys have done throughout this process. And then thank you to all the attendees that joined us this afternoon. It's a beautiful day out, so yeah, enjoy those extra 10 minutes. And again, thank you for joining us this afternoon. Have a great day.
Thanks.
All right, thanks.